Mark, it's great to talk to you. We did talk about it being kind of on both ends, right? Lower value than some of the other mega cap names, but still with a lot of growth ahead of it. It was interesting on the earnings call. It felt like the analysts last night wanted to push Sundar Pichai's team to talk more about those future plans. He was asked about crypto, Web3, metaverse, and unlike some of the other CEOs that we hear on this topic, they took a really measured stance saying, yes, we're working on it and we will share more when we have more. Does that kind of give you confidence in their future ability to keep growing in emerging places, like emerging technologies?
Well, Deirdre, you're right. They can be very guarded in the earnings call, but that's okay. The numbers speak for themselves when it comes to the company and the free cash flow generation and the revenue growth of this asset. What they're showing is, although we're always focused on these future businesses, what's driving this business is still the core search business. And I've lost track here. 18 years after the company was founded, they're still growing that at 32% year over year. That's really impressive. And it also says that a lot of this innovation is occurring right in the core business. Like they're using machine learning and AI to make search results more and more relevant, especially as we've seen this consumer shift towards online retail and omni-channel retail. Google is extremely well positioned for that, and that's one of the reasons we like the stock here.
Mark, nearly $140 billion cash pile that Alphabet has, and we're in an inflationary environment. Should it be doing more with that in terms of returning value to shareholders?
Yeah, it should be, and I think they are. They stepped up. They did $13.5 billion in share repurchases last year. We think they can continue at that pace, and they can probably actually increase it. So for the full year, they did about $50 billion in share returns. I think you're going to see. I think a dividend is inevitable. Now, I don't think it's this year. I think 2 to 3 years out down the road. But this is a company that we think is on track to generate $100 billion in free cash flow by 2023, and within the next 3 years is probably going to be the large cap company generating more free cash flow than any other. And one of the reasons I also like the stock is it's not priced like that. It still trades at a discount to names like Microsoft and Apple, even though Google, I think, is going to be generating more free cash flow than either of those companies in a relatively short period of time.
Hey, Mark, it is John. I wonder your thoughts on what we can learn about cost discipline under Pichai and Porat after this quarter. I mean, they hired quite a bit, but things like driverless and all these other bets that they were emphasizing before that seemed to be the reason why they went with this Alphabet thing to take the focus off of just Google and maybe at least sideline some of those other costs. I mean, that doesn't seem to be the story here. They might as well just call it Google, right? But what are we learning about cost discipline?
John, I think cost discipline is kind of the same as it's always ever been with Google. So they're going to invest, they're going to spend aggressively on forward investments. And by the way, as a tech investor, that's what you want them to be doing. You want them to be building out option value. I think there's still some dramatic option value here. Waymo was not mentioned one time in the earnings call last night. I think that's that 5 to 10 year wonderful option value that you get for free, really, as a Google shareholder, although it may turn out to be zero, but it could also turn out to be a lot. They're running this business at 30%, operating margins. I don't think we're going to see a major change in that. Maybe slightly goes up in the next couple of years. That's where they want to run the business, and any excess profits are going to plow back into future investments. I think that's good for tech shareholders.